Good morning everybody, and this is your S&P 500 day trade setup for today. So there's nothing really going on at the moment, and that's to be expected. We do have the jobs data coming out today, and then obviously we've got non-farm payrolls tomorrow. So this diagonal trend line, you can see how it was used here as resistance, basically broke through here again. Used as resistance, used as resistance, used as resistance, used as resistance, and used as resistance again. So I can draw another one for you right here. Okay, and you probably find you can extend these levels back multiple times. You can extend it back for extended periods of time. And you'll see that those trend lines are 9 times out of 10 respected. So somewhere in the past you would have seen that there has been breakouts of this, and then it turns into support. But at the moment it is resistance. Okay, and this is on the daily chart. So if we just drop down to the 3 hour, you'll see what I'm talking about. Okay, so all I'm pointing out is just always have a look at that and keep those things, especially for when you're looking for take profit areas and you're sitting with a situation where there's not much to the left what you're aiming for. Then at least you can pick up on the diagonals, and the diagonals will give you some kind of direction. At the moment there is no direction. This rejection up here, let's just do that. Okay, not really a rejection. There's probably some 5 minutes or 3 minutes structure in here where they're selling off, but there's a previous high. This is the current. It is a new high, I think. Yeah, ever so slightly, but there's nothing really that well, you can see there's a tail and there's a tail, so that's the structure that it's trading off at the moment. And yeah, so we did make a bit of a new high, but at the moment nothing really to write home about, and I think it's going to stay like this until we get the data out. So, and data today is jobs data, and then we've got non-farm payrolls tomorrow. So those are two pretty big bits of information or data coming out. There's so much happening in the US at the moment around the coronavirus. The stimulus package is still being tossed around between the politicians, and nobody coming to any agreement of how that's going to work out. And then obviously then we've got the vaccine, and the UK have approved the vaccine and they've got it rolling out, but the US are lagging behind a bit on that at the moment. So a lot of things in limbo, and I think that's what you can see in the charts at the moment. A lot of things that are in limbo. Now, one thing I want to point out here, and I pointed it out yesterday, we had 5 minute gaps pretty much in the chart. Now, I want to go too far back, but it's something that you really do need to keep in your arsenal. Okay, so this 5 minute gap here, that's actually there, is still open. Okay, bear with me, my mouse battery is flat, so we're using the laptop's touchpad at the moment. And what I wanted to point out is, look there, and this happened yesterday. So we had as Powell was testifying, he said something about the stimulus package, and we had this little gap up and run, and then it just went sideways. Whenever you see the kind of 5 minute gaps like that, typically what you see is price come back to it, and that's normally an indication for me to look for the structure. And if you look there, you can see the structure on the 5 minute. Let's just get that. So it's 36. Let's just call it 3660. And if I come to the hour, you'll see there was structure here at 3660. Okay, we had this little gap up. You'll see it pretty much on most time frames. You'll see in the gap up, came back. That was your buying in area there. and I don't think you'd be holding on to it any longer now. You'd have pretty much taken profit already. So that would have been a trade on the 15 or even the 5-minute chart. Okay, so we've still got this gap here, the 3638. That's a 5-minute gap as well, and then you've got this daily gap down here. Just keep those gaps in mind. They do, or more often than not, those little 5-minute gaps do get filled. And if you're in a sideways motion on the higher time frames, then what you typically find is it does close in the same day. If you're in a very strong breakout or in a trending market, then they don't typically close the same day, but they do eventually close. I think you probably put a figure to that. It's probably around 90%. Well, let's say 85 to 90% of the time that those gaps do close. So just keep that in mind. Anyway, that's just a little bit of a tip that I use quite often, because I get my structure in on the hour and sort of the 1 hour, 3 hour, and 8 hour. But then I'll often drop down to the 5 or 15 minute to wait for my entries. Okay, so yeah, that's kind of me. There's nothing here, guys. There's really nothing worth trading at the moment, and I don't anticipate anything changing until after the jobs number. It's that basically 3:30 p.m. my time, and I'm GMT +2. So work it out for yourself, or just hop onto something like investing.com and they'll give you all the details you need there. So for me, it's sit quietly, wait patiently, and let's see whether the structure does break out. Okay, and I'm still of the opinion that we're going to break to the upside. It's just we've got some fairly strong overhead resistance here, and it's not horizontal, it's diagonal overhead resistance. So that's kind of what we need to look at. We need to break above those previous highs here, come back and find some support at 36,760. Sorry, 36,760. Okay, so if we can find support there, then I anticipate we should move to the upside again. Okay, but for me, I think you probably find we're going to test the lows here, back up, test the lows, and that's kind of how it's going to go. We'll have fairly biggish moves with Europe opening, and then it'll just fizzle out, and we'll wait. Okay, anyway, guys, that's it for me rambling now. So we'll catch up with you later. Be safe, keep those stops really tight today and tomorrow. Protect your capital at all costs. Anyway, catch up with you later. Cheers for now.